It's me Pavitran here, and today we're gonna do a weekly forecast of coming week and how price is going to react to the levels which we are going to give. And before that, a small recap of what are the last week levels and how the price has been reacting to this level. And here is the first lower high, second lower high, third lower high, and this is the recent lower low. So we mentioned clearly that if first or the recent lower high has been taken out, then that is a clear indication is that bullishness might come into the market. And if after breaking the lower high, if market forms a bottom above this lower low, then it is a clear indication is that market sentiment will get changed into an bullish mode. As you can see on Monday, it was a flat opening. It did not give any kind of full bearishness or full bullishness. It opened, and as you can see, it was indecisive. Both bullishness and bearishness came, and it ended in an indecisive or a neutral mode. After that, you can see the trend line has been respected, and after that fall came, but that was not pretty hard because the lower low is intact. It did not breach the lower low, so that is also another indication is that buyers are trying to dominate the market because they are not allowing the previous lower low to get breached. So that is how maybe an hint that bullishness might come into the market, but we may not be very sure of it. Just a hint, we have to take whatever that is available to us. And after that, on Tuesday, you can see a clear breakout of the trend line. So after the breakout of the trend line, it is very obvious that bulls are in control for a short period of time. And when will there be a full control in the market is that the recent lower high has to be broken and sustained above that. So you can see it has broken on the next candle, it has sustained above that. So a final confirmation is that the low should be high above the lower low. See, the low also is higher above that region. So this is the first higher high, and this is the first higher low. So the bearish channel has been broken, and the bearish market sentiment has turned into a bullish mode. And right now, what is the first hurdle we have mentioned is 38.50 level. As you can see, price tried to come near that level. After that, it tried to move down. After that, it even gave a bearish candle that is not engulfing, it's just a bearish candle. See, you can see price broke down below that. After quite some period of time, it retraced back to the original levels. So that means buyers are strong in the market. If this candle has closed below the previous candle that had formed on 23.30, that was a time around 11:30. If this red candle had closed below, or even if it given a wick below the previous kind of a hammer candle, then we can able to say that bearishness is starting to come, and this 38.50 level is being respected well. But that did not happen. The low has not been breached after this. As you can see, the red candle, after that it keep on trying to go higher and higher, and on 6:30 in the morning a clear breakout has happened on that level. So it's another indication is that now 38.50 will be acting as a support. After this break, you can see price went all the way up to 35.50 level. It is not an exact level. So if I mentioned 38.50, it may be around 38.10 or 20 or 30. It can take bearish confirmation or bearish engulfing patterns, whichever bearish candlestick patterns that are available. If it takes near that region, then it is an indication that that region is being respected, that resistance is being rejected or respected, sorry. So right now 38.50 is the resistance which I have given. It does not touch that level, but when reaching to 39.40, and from there it has given an inverted hammer. So it is a clear indication is that sellers are trying to come into the market. So this is a hint. On the next candle, if you try to take entry, place the inverted hammer high as stop loss. Once that gets triggered, then no problem, you should be either you have to wait for a candle close above the recent high, or you can take a reverse entry, because bulls again came in strong at 6:30 in the evening, and as you can see it broke that 35.50 level, and after that it started to go to another resistant level, that is 40.30. How 40.30 formed? There's not a rocket science behind this. As you can move, or you can scroll down the previous to September 3. This is the place where it taken support and moved all the way up till 41.80. So this region, from the low you can mark 40.20 level to 40.60 level. There may be kind of a resistant region where sellers might get defend to that region. So we are not very sure of at exactly which price sellers might come into the market, but they will give slight indication is that see if you can observe closely, a green candle at 21:30, that is around 9:30. After that 22:30, sellers trying to come into the market, but the previous candle, that is 9:30 candle, 21:30 candle low has not been breached. So if that low has been breached, then we can take it as an engulfing candle, but that did not breach. After that it started to rally up. Whenever price tries to break 40.30, it is finding very hard to sustain above that. So whenever price goes above, it comes down with wick. So this is the place where the sellers are being active. You can find the rejection, first rejection, second, third. This is a small inverted hammer, but it's also a pretty good one to short. If you want for a confirmation, you should be looking for engulfing patterns. So this is a clear engulfing pattern which are formed at 5:30 in the early morning on 17th of September. Maybe you can short here by placing the inverted hammer or this recent rejection candle high. So if you can trail it properly, then you would have booked somewhere around 30.60. From the entry, maybe 40 cents you are booked. After that again the same thing happened, again the rejection happened, again if you have entered, if you trail your profits, or no problem. If after seeing this green candle, so you could have exited nearly with some 10 to maybe 5 to 10 cents loss, that's okay. Maybe if you are holden to that stop loss of the recent high, it would have triggered. So nevertheless it's up to our decision whether to move the stop loss, move the trailing stop loss to near cost to cost, or you can hold on. It's always up to the person who is taking decisions right now. We can only give the levels and the price, how we can have to wait for the price to react to that level. So whenever if a price is trading in that level, for example I given 41.50 as resistance, so we should not be expecting is that price will touch 41.50 level, then it will fall sharply. No, that won't happen in the market. 41.50 plus or minus, there is a 50% chance that market can fall from that particular zone, maybe from 41.40 to 41.60, buffer 10% plus or minus 10 cents to that. And that zone, maybe that is a zone where previous you can able to see here. I will try to scroll it down. Yeah, it has taken a resistance, or even it has broken off, then it again took resistance, then it again came down pretty sharp, then it again took resistance here, then it again broken off, then again it broken off. So we are not very clear that how it is going to react and what is going to react. So it's always we should be on a positive side. We have to look for another confirmation. The first confirmation is the price. So 41.50, we should be looking for selling opportunities. So what is the next confirmation is that price action, that is candlesticks pattern. So what is the candlestick pattern suggested here? This is the first one. If you want to short the next candle, this is the high, recent high for us. Maybe you would have got this profit, or maybe trailing stop loss might have triggered, no problem, just been on other trade. This is the candle, it's a good engulfing one. If you had shorted in the next candle, and this is the recent high stop loss, if you are trailing, it would have triggered somewhere around here. And if you are not trailing, you would have booked maybe whatever here. If you possible, you can book it, or in this candle also you can able to book it. no problem nevertheless. So after price reaching to the resistance zone, we have to look for a bearish candlestick pattern. After getting confirmation from price, there is an 80% odd chance that market can fall from that place. This is the first confirmation is the resistance. Second confirmation is price action, you're going in for a short. This is a fall it has given. After that it tried to raise above, after that it again fell down. So in this case my trailing stop loss is triggered. Why? Because my trailing stop loss is previous candle high. So this is the place where my trailing stop loss might have got triggered if I have entered. So I did not enter here because I was not able to trade actively in crude oil. I was focusing on the stocks, but from Monday I think I will be trading, and the same what I'm going to explain you, the same way I will be able to trade. I will just look for the resistance which I mentioned to you. Whenever price come near to that resistance, my time frame is 30 minutes. If I find a bearish engulfing patterns on the resistance level, I will go in for a sell. If the price is near the support region, I will look for bullish engulfing patterns or bullish candlesticks pattern, then I will go for a buy. This is a simple trick you can do on resistance and support. Why I have choosing to do short at the resistance and buy at support, there is 80% odd chances is that it can take support or take resistance at the region. Maybe you can find some patterns like this. So this is a good pattern, it has given nice breakout. So this is a good pattern which has given breakout, you can trade this pattern. There are many patterns like Darvish box, a simple trend line breakouts, head and shoulder patterns, peanut shaped patterns, triangles, inverted triangles. There are many kind of patterns available. If you are a pattern trader, then you might have caught this rally, and maybe on a previous week this was the consolidation phase which I mentioned. If you can draw the trend line over here, then this is also a kind of pattern which will help you. So you can mark this high, and as you can see this is the place, and the low has been trade. So when this gets broken, then it will be easy for us, or even this one. So that get broken here, or if you can even keep this as support if this gets broken. So it's up to you whether which candle you need to connect, or which candle you have to take support or resistance. There is not a fixed rule that high should be, the candle high should be connected. It is not a rule that this candle has to be connected only to this candle. No, it's a general line. Whatever tries to come in between the lines, maybe for example I'm connecting high here, it does not touch here, it does not touch here, it does not touch here, it's connecting only, it's touching only this region. There is no obvious rule that it should actually touch and retrace. No, the trend line will be respected if you can find wicks in that region. Wicks is the rejection of the candlesticks pattern. This is small wicks, this is a huge one, this is a huge one, this is a huge one. So it is a kind of indication to us that sellers are trying to come into the market on this trend line. And that's it from the previous week. Why I'm explaining you so much is that I was very bearish on crude oil last week. I was expecting this low to break. If this low, or even this lower, the recent lower low should be broken. If this recent lower low is broken, and even if this low gets broken and 35 it gets broken, then I was expecting $30 range. But to my surprise is that first and the foremost lower is also is not been broken. So that was a clear indication, and the market was trading in a slight range from 38.5 to 36.5. There's a $2 range. I was expecting even if it breaks a market to take resistance at 38.5, but that did not happen. The main reason for that is because this was an origin of the rally which has ended here. So this is the region where it has broken off, and again price tested there, and again whenever price tries to go there, I thought it will test that region, but even that did not happen. After that second region was the top of the region which has taken resistance at 39.50 level. After that it even it kind of respected that, but buyers was still maybe forceful, or buyers was still very aggressive in that region. After that it's broke off pretty hard. So once that 39.50 level gets broken, that's a resistance, then obviously if price tries to come, then it will act as a support. So right now it is acting as a support, and right now this is a green candle that was not bullish, that was not engulfing. As you can see, the high has been not breached. After that, this is a pretty good example of how 39.50 has taken support. It's a clear bullish engulfing candlesticks pattern, and after that you can see the rally. It went all the way up till it find the resistance at the top region. So this is how we can able to capture the small move only with the help of candlesticks pattern. Or if you want to be so aggressive, you want to capture minute details, then see the candle at 11:30. If you place a buy order above that, then it is a pretty good chance that if market breaks the previous high, there is a pretty good chance that the market can go further up. This applies only at resistance and demand zones, and resistance and supply zones. So don't try to do this on every candlesticks pattern, because once it gets stuck in a range, then you will be having quite some whipsaws. Maybe you will be getting kind of a wrong entry here. So this is a range, so this is a range, this is the range, this is the range, this is the range, this is the range. In this range, if you get stuck in a wrong side, then your account will be blown off quite easily. And what is the level? Coming week level is that the same, the pretty hard level which it has to break at 41.50. So right now let's take a quick look at of what had happened. The origin of the rally started here and maybe around 4th of September, but that's not the case. It has happened at the 2nd of September, 43 point maybe around 10 or 20 cents. So just keep in mind, if 41.50 gets broken, then 43 will be the hurdle. So after it has broken 41, you can even mark this zone, 41.80 to 90. Maybe this is the origin of the rally. So the shorters who have shorted here, they will try to defend the region when price tries to come near this region 41.80. If price tries to come near at 41.80, if it gives bearish engulfing patterns, and then you can short with an stop loss of the previous candle high. That will be very obvious that if that region is respected, we will get a fall. If that region is not respected, then our stop loss will be triggered. Once our stop loss is triggered, there is pretty much again an 80% chance that market will try to go further up from our levels. Why 80% is that the 20% will always remain a mystery. We can't able to do anything with that. We can't be sure that price come near, it should fall here. No, it does not happen like that. It will consolidate and it will move sideways. It will even give whipsaws and ups down, up down. So we can't be very sure of the 20%. We don't know. We have an edge of 80%. Whenever market tries to go near that to a level, there's a 50% chance that it can come down, and another 30% chance that candlestick given confirmation to us. No, another 20% is always with the market. It can give us a good reward, and it can also take us the reward. But what should be is in our favor is that we should play with stop losses. You bought here, your stop loss should be there. You can either trail your profits, or you can keep whatever amount you keep as a stop loss. For example, maybe I will give an example for this. I usually trail my profits because I don't want to miss out bigger ones. If you're looking for 1:1 accuracy, then you should be accurate more than 50% of the time, maybe 60% or 80% you should be very accurate of your entries and exit. That is where you will be able to make money from the share market. If you are not accurate enough, then you have to increase your reward. That is another way to make profits from the market. In this two way I prefer the second one, because even though I'm not very accurate with that, I place only small stop loss of 20 cents or even 30. At the max I will place 35 to 40. That will be the max, based on the candle how it's getting formed. And that is my age. My 40 per 40 cents or 20 cents is my age, because when I lose for a 5 consecutive times, I still lose only by $1. So even if I lose by $1, say consider on this place I have taken a trade. This is the place where I have, after this seeing the candle at 5:30, I have shorted at maybe around maybe I always wait for a retracement, maybe 2 to 3 cents back. Opening will be somewhere around 40.05. I entered at 40.10. So stop loss is somewhere near the recent high, that is 40.30 or 35. So I'm taking a risk of maybe 20 to 30 cents. So what I will do is that I will wait for a candle close and I will decide, okay, now candle has gone near 39.80, that is nearly 30 cents which I'm on profit. So I will move my stop loss to cost, or even maybe break even of going all the spreads. Maybe 40.50 will be my stop loss. After that, after this candle close, I will move my stop loss to the at 7:30 high, maybe around 39.95. That be okay. And after that, here after that, so in this way, if you are able to trail your profits, then I would have booked somewhere around nearly 50 or nearly 60 cents in that manner. So as you can see, if I am looking for 1:1 on this place, if I'm looking for 1:1 this place, I would have lost another 40 cents. So that is nearly 1:3 ratios. So I don't want to lose that. And if I have entered on this breakout, or even if entered after this high gets formed, if I'm looking for a stop loss just below that, that's nearly 20 to 30 cents at the max. 20 to 30 cents will be the maximum stop loss you're going to afford. But look at the returns you are going to get in this one trade. You would have booked nearly somewhere around $1, that is 1:5. That was the ratio of your reward. So even if you lose for the 5 consecutive times, if you book only one winning trade with a risk reward of 1:5 or 1:3 or 1:2, you will be always ending in month with green. But if you are going to follow 1:1, then you should improve your accuracy. In market, no one can able to maintain a much more accurate levels for longer period of times. Maybe they will make silly mistakes. There will be always some mistakes that comes into place. That is why I'm always using trailing stop loss that can increase our profitability in the longer run. You can enter anywhere by taking a good risk reward. Previous candle high, that won't be much of a difference. Maybe 20 to 30 or even maximum 40 to 50 cents you will be taking a risk. And if you want for 1:1 accuracy, then I don't usually prefer that, but you should be trying to enter with perfect accuracy and perfect exit, and you should not be regretting for the amount which is lost after the rally. So usually there won't be much of a rally. If a rally takes place, whatever profits you have made in the range bound market, I can able to make it one single rally. So there will be a rally, many opportunities for market to rally. So if I had entered on at least one rally, I can able to cover up for whole month. Losses can be turned into green. But in your case, the person who is following 1:1, it will be quite difficult for them to just do and be accurate all the times with 1:1. I suggest you just move for 1:2 ratios. My preference is always training stop loss, because I don't know how much I will get. That's up to the market. Let's say another example. I shorted here. The person who shorted after seeing this inverted hammer might have shorted here. For 1:1 ratio, he might have booked profit, but my trailing stop loss would be triggered here, cost to cost. So when you compare this both trades with him, the person who is following trailing stop loss, he will be in profit. still the person who have made entry with 21:1, he will be still 20 cents behind the person who is following trailing, because the person who have trailed booked 60 cents here cost to cost. The person who have followed 1:1 accuracy, he have booked 20 cents here, 20 cents here. So the person who have followed trailing stop loss have been earning 60 cents, and the person who have not followed have only earned 40 cents. 20 cents has been lacking. The same case here. This is a clear indication, price at resistance, bearish candlesticks patterns, and after that I'm entering, and you can trailing your stop loss. You can exit in whichever place that is convenient to you. It's up to you. It's always is subject to trailing stop loss. I usually prefer previous candle high. It might get triggered, no problem, I will enter again and book profits. So person, as you can see from here, 41.102, it went all the way to again a 50 or $60 and 60 cents in profit. But person who is following 20, 1:1, 20. So again a 40 cents in addition for the person who have used to trailing method. So this is what I want to convey this week, is that try to always use a trailing stop loss. One or the other day you will be rewarded pretty much. We actually don't know when that day will come or when market will start to trend, but if market started to trend, then it will be a big jackpot for all of you guys. And a person who is following 1:1, I suggest you to slightly increase your reward to second. Maybe if you are starting to book at 20, maybe you can move your trailing stop loss to cost and just wait for another 20. So even if market reverses, you won't be losing. Your trailing stop loss will get triggered. No matter what, you won't be lost in the market in the process. So this is another method. Just to find out which method suits you, and you can trade whatever that favors you. And what are the levels this week? Is 43 point, okay, maybe 43 will give a quite a reward for us, because origin of the rally is here, 41.80. just look out for 41.80 will come in pretty handy, because origin of the rally, the person or the operator who have shorted here, they will try to defend this region at 41.80, and the biggest hurdle will be here, and another origin of the rally is 43. So what is the range for coming week is that I'm not expecting another bull rally to continue further. I am still biased with bearish zone. I don't know why this bull rally in the news they have portrayed as hurricane has struck, and because of that the production has been altered. Well, usually if a production is altered, then demand will get increased and automatically price will increase. That is how the supply and demand works. Let's see if once the hurricane settles and floods has been gone out of, and when normalcy tries to come back, then the maybe the fall is on cards. And on a lower side, as usual, 39.50 has to get broken. Once that level gets broken, then 38.50 level should get broken. Once that level gets breached, then final hurdle will be the recent or the previous origin of the rally. Just keep in mind, this is the origin of the rally. It went up, it came down, it went up, it went down, and after that it broke down and it went all the way up. So this is not the origin of the rally. For me, this is the origin of the rally. So whenever price tries to come near 36.20, we will be expecting a market to push further up. So remember, 36.20 to 35.80, that is the zone. Whenever market tries to come here, if you find bullish engulfing patterns in this region, or 38.50 regions, or 38.50 regions, or 40.30 regions, if you find any kind of bull engulfing patterns or bullish engulfing patterns like hammer, or even a doji, maybe a full bullish engulfing candlesticks patterns, and a small three soldiers which has formed on near the support region. These are all small hints which market can give to us, and we can enter with a minimum stop loss, and you can just focus on the next resistance which is placed above that. So let's see how this goes on. And on upper side, 41 has to break, then 41.80 has to break, then 43 will be on the cards. So it's a quite huge hurdle on a coming week. Range for this week especially is 43. So once 43 is triggered, then we will be looking for a break of again the recent high which has made, that is 43.50. so that level was a very imminent level. See, I will just mark it. Let's see when this level gets broken. 43.50 we have marked there, and it has taken 1 and 2 and 3 and 4 5. It has taken nearly 5 to 6 times resistance over that 43.50 level. So when market breaks 41.80, then odds of touching 43 is pretty much maybe around 50% chance to 50 to 70% chance is there. Then when market breaks 43.50, a close on 4-hour candle as up and down 43, then we will be testing 45, 47. So this week range will be pretty much higher, mainly because of the volatility which has happened on a last week. This was a big recovery candle which has happened on a weekly basis. This so previous week it was a big a fall of a red candle. This week it was a quite a recovery, but I'm very much biased in this position, so I was not convinced that market is so much bullishness is not in the market. From the month of March to April, May, June, I keep on saying market will fall. So I'm expecting the same market has to fall, but I don't know when, and I don't know when market will come back to its original $30 level. And I'm expecting that before going to 50, I'm expecting a touch to 30. Let's see how this week goes on. Range for this week is 43, and on a downside 38.50 will be on cards. Once this two region gets broken, then as usual again $30 will be on the cards. And if 43.50 gets broken and closed on 4-hour candle, then 45, 47 will be on the cards. Let's see how this week rolls on. Thank you.